Good morning. It's Wednesday, December 11th. We're looking at the S&P 500. It is the FOMC funds rate is going to be released today. So we're expecting that to stay where it is at 1.75. It's not expected to rise. If they did raise interest rates, we would likely see some very big selling that would come into the market. It would, the market would not see that as a good thing. Expecting interest rates to stay the same. So interest rates the same or lowered, which is not expected. Then we would, that will continue. That the Fed's going to continue to keep rates low. That should continue to drive the market up. So here we have our prediction point that we've traded above here. I want to pull this a little bit tighter so you can see a couple of things here. So see how we really already used this price, and we really used this price, and we really used this price already. So where that leaves us is we don't really want to come lower than a certain price here. Maybe this, we could say 30 half area. You can see where I'm kind of putting my, so something like that. Probably wouldn't want to trade a lot lower than here. 30 half, 30.75. We can see we have a couple of, now I'm saying why we wouldn't want to do that. Because trading lower than that, we've already used this. So it doesn't mean we can't get the buyers from here again, just not preferable. And doesn't mean they don't buy it here for a bounce, but it changes things. Same thing here, same thing here. Okay? So could see something like this area, this 30 half area. The other thing, of course, we have this 32 quarter area that was pretty important, and then we have somewhere up here like 33.75 or 34, something like that. So the ideal scenario here would be that we would pull back and that this 34 area would hold, worst case. That's ideal. If that doesn't happen, then we could see a bigger pullback, and it depends on the time. Now, if it's happening, if they wick it down here on the news, on the funds release, sure, I guess we could wick down to one of these and then rip up. That could happen if the rates are, if the interest rate news is good. But if it's this morning and it's trading really slow and we kind of work our way down here, yeah, I guess the buyers could step in there. Is it ideal? It's really not ideal, but that could happen. So it's going to depend on the timing here today. We'll definitely be updating and keeping you posted as we get closer to the funds, to the interest rate release. That's 11 o'clock Pacific time. So we'll keep you posted as we get closer to that. But that's kind of what we're looking for there. If that were to break, at least back here to 1375, and then really at least one of those. Yeah, at least back to one of these, it would seem like would make sense. Below that, you can see we've got quite a gap. So back here to one of these, that's 80 quarter and 78 quarter. So if we do get that kind of that break and we get a bunch of selling, it's at least back to here, maybe back into 80 or 78. On the other side, if we get back up above this 45.75 prediction point, we should see new highs. We should see above this high. Let's pull this a little bit tighter here. we haven't really used either of these, so we could see some pullback from there. But then that's the all-time high right there. So back up above here, or really if we come back and we hold above the prediction point here, then there we have 64.25. So that would be the next target to the upside, and then 70. So there we have today, and we will also update you as we get closer to the funds release. Okay, see you in the chat room.